one of these days your hard work is going to pay off and you're going to find yourself with a tiger by the tail, like Rocket Lab here, a stock that broke out of a good buy point and blasted off into space. And let's say you nailed the breakout perfectly, but you are kicking yourself because you don't have enough shares. You never have enough shares when a stock is behaving well, right? So let me answer for you right now. I had a Patreon member who asked me, how do I add to or press positions that are working well? I think he mentioned Tesla and IBIT, the Bitcoin ETF. Let me show you a secret. Well, I don't know if it's a secret, but let me show you the key mechanism, I guess, and that is to look for volume dry up. So first of all, first of all, not investment advice. This is just my opinion. This is just for education. Trade at your own risk, etc. So first of all, you really don't want to dilute your original buy point that much. So in general, when your trades are working, which is not always, but when your trades are working, you generally want to trade larger with tighter stops instead of having a small position with a loose stop, and then it works, and then you find yourself scrambling for more shares. But let's say we own Rocket Lab here, and let's say we wanted to add some more shares without diluting our position too much. So the key, like I said, is volume drop. And let's just mark this up real quick. Give me 1 second here. So here is our base, okay? 1 sec. In hindsight, pretty obvious and easy base, right? You got a nice cup here. You got a handle that broke to the downside and with a wicked shakeout. And then you had an expectation breaker with a bounce above the 50-day breakout on high volume. Here, my friends, is where you want to buy the stock. Maybe you're buying over here and getting stopped out first. Buy the stock here. Nice breakout on big volume, came in on gentle volume. So our first chance to get into this one larger is on the first touch of the 50-day, as William O'Neill teaches, although in reality, the strongest stocks don't touch the 50-day, they get near the 50-day. So what we look for is, see how the stock pulled back to the lip line, to the breakout point, and look how, let me turn this on, look how volume dries up right here the day before the breakout. So volume is coming in, it's coming in, then it gets really quiet, and then it opens to the upside. That's where we add to our position. This is a dragonfly doji. That's a accumulatory candlestick when it's at the bottom of a little downtrend like that. So works really nicely. And then let's say we want to add a little more. Well, again, we got this nice tight area to trade off of. And, it's only 7% in depth. So let's look again for, we had this breakout and a squat. And then we had, look at that. There's another dragonfly doji. And look at the volume. Really low volume. And then the next day opens to the upside. That's where you add to your position. So I'd say you put on a full position here. You double your position here. Now you just want to juice it a little bit. Just like 10%, maybe 15%. And then put, you're going to work up your original stop. You're going to trail it up gradually beneath the 50-day here. But these new shares, you want to put a tight stop. So you buy it right here, and you put a tight stop. Well, here, that's 6%. So I would just do an arbitrary 5% stop, or even put it at the low of the day. Moves up, 30% or something, and then it starts flagging out again. Let's look at this flag. Volume's coming down, really quiet, spinning top doji, and then an up day. So again, here's where we can add 10% more, put a tight stop, 5% or so beneath. Now look, this isn't always going to work. Sometimes you're going to get stopped out of the add-ons, but when it does work, you're kind of pyramiding up, right? And then look, one more time, you get a tight base, as we say, 1, 2, 3, 10-ish candlesticks or more. We look for that volume to come in. Here's where the volume came in really nicely. Now you could arguably have gone here, even though the volume was elevated, the second half of the day showed accumulation. So we can discount the volume there because a lot of that volume is buy volume. So I would have been comfortable adding 10% on this day. Or if you just waited, there's that Dragonfly Doji again, really quiet day, moves to the upside, add 10%, 5% stop, or just low of the day, and away you go. Now this is looking climactic. You got the biggest volume of the year. You got a lot of selling into this big gap up. Here I would be selling most or all of my position. Let's do another one or two. Why not? Here is Palantir. Same kind of thing, right? Here is our base. So I can draw that in for you real quick. Okay, here's our base. One sec. Okay, saucer base. Weird action in the middle there. Not sure what to make of that. That's probably earnings. Little bit of a handle here. Maybe you're able to get in. It would be an adventurous trader to get in there. But certainly most of us would have been comfortable buying this breakout and then rolls back in, shakes everybody out, bounce off the 200 day. So now we want to look for that volume dry up, right? Honestly, this is pretty wild and woolly price action. You've got a fading candle here, and the volume was elevated. I probably wouldn't have been comfortable getting in there. Then it rolls over to the 21 day. Volume is quiet. A little bit of a demand hammer there. I would have been comfortable adding 10% there. Probably would have gotten stopped out there. But then if we were patient, we see volume dry up again. Look how dead the volume is. That's the quietest volume day in, what, a few months? There's our dead volume, opens to the upside. That's where we start our position or add to our position. Tight stop here beneath the 50 day. Worked like a charm. Here's another tight area. We look for that volume dry up. Didn't really give us a perfect entry point here, but certainly right here on October 2nd, volume is quite low, and the volume that was there was buying, opens to the upside the next day. That's where we add our 10% with a 5% stop, and then we look for another entry point. Now this was earnings, I believe, so we're not going to want to buy right before earnings. Now this is, again, this is looking kind of blow-offy, right? We got some big volume coming in, what, 150% off of the base. I would be selling. We almost have a pinchers or railroad tracks pattern where you have a wide-ranging up day and then a wide-ranging down day. It's a bit flawed, but look that up. Railroad tracks or pincher patterns, Japanese candlesticks. In any case, I'd be selling some off right there. Here's a great example of the old William O'Neill first touch of the 50 day. If you miss, this is Lumen, L-U-M-N. If you miss this spectacular rip off of the lows here, patiently waiting, patiently waiting, patiently waiting, volume dying down here on the 50 day, and then you get a nice move to the upside. Maybe you do a half position here because you got a lot of trap buyers here. Fools around for a while, gives you probably a heart attack or at least an ulcer, and then super quiet, and then the next day we get this news on the Meta and Amazon partnership. That's where we add or initiate our position. Breakout coming back in here. Volume is a bit elevated. Let's see if this will J-hook out of here. So that's the secret, guys. We look for that volume dry up, which signals that, there just aren't many shares coming to market. There aren't many sellers left. Let's look at Tesla and 𝗦𝘂𝐽𝐽 for my Patreon member here in just a second. But just glancing on app, let's say you bought this beautiful breakout here. Here's a tight area, dead volume on the 27th, up day on the 30th. That's where you start your position. Okay, as far as Tesla here, let's say you missed this big breakout, tons of buy volume coming in. There's really not a, quote, safe area to get into this thing yet, in my opinion. We need to see volume dry up. We need to see some sort of platform that we can trade off. See right here, volume dry up, breakout. We need something that looks like that. So we'll see. I actually was thinking this would come down to 300 or so and maybe base out, or even come down to the top of the pattern at, say, 275. But we got this little gap up on the Trump, Trump talking about making it easier for autonomous vehicles. So this gap up kind of messed up our plan. I think it just needs to base out here. Can't really tell you when to buy this one. I'll just say that I know it. I'll know it when I see it. But maybe, maybe we just get a bunch of days inside this wild action and we see the volume come down. Let's see. 𝗦𝘂𝐽𝐽, fantastic breakout of this long base. Now we're starting to get a tight area here. Volume did come in. So if you wanted to be super aggressive, you could have actually put on a few shares today. That's really short though. This is only, look, 1, 2, 3. The successful tight areas are usually about 10 candles or so. See that? 10 candles or so. This is an awesome trend to be. If you're on this wave, it's pretty awesome. If you're not, I personally, just looking at it technically, not from a fundamental perspective, I would want to see this, make a tight flag for 10 days or so, maybe come down and make a subtle bounce off of the 21-day. Like, see this 21-day bounce? We got to pull back, low volume pullback, bounce off the 21-day, up day the next day. So that would probably be your two spots to get in. I hope that was helpful for you. That's some techniques on how to add to your position. Just go light, right? You want to go heavy to start with when things are going well, and then your add-ons are little, so you don't water down your buy point too greatly. If you liked the video, of course, if you liked the video, consider liking it. I also have a Patreon. I show my portfolio and focus list each weekend to my Patreon members and do blog posts during the week. You might want to check that out. Don't forget to check out my sponsor, Seeking Alpha Premium, link in the description below. See you guys in the next video.